Silver Dave here. I'm coming to you with another video on a day that gold has dropped. Now, I haven't changed my prediction of what gold will be in the future, but gold has dropped today. So let's find out why gold has dropped. So my long-term price projection for gold, at least according to some of the the machine learning program I've been working on, is targeting somewhere around $2,000+ gold, right? You can see it from here. And gold today, well, the price has gone down. You're like, oh, are we not on target anymore? Well, if you look at how gold moved over the past few days, if it moved at this rate, we would be at, I would say, let's see, we would be at, I don't know, almost $2,000 gold by by the end of yeah, in 2 weeks. So no, I think we are still on target. I think it was just that it's normal that it went down. It was the extremely strong bullish strong reversion from the last trend, and really to be on target we should expect more moderate growth. Actually, I would prefer if gold grinded slowly upwards rather than see this type of really strong almost parabolic inversion and then the strong parabolic decrease. It's potentially what could form is a lot of technical analysts call a head and shoulders, and we might see that. And that is typically a point where afterwards you see more further weakness for the asset before another rise. And it's possible that we might see that. We might see like a shoulder, a head, another shoulder, goes a bit lower, goes back up, goes lower, goes back up, and so on and so on and so on. Do I think gold will rise a little? I think gold tomorrow, it's got a good case to revert a little bit, especially I believe if the London market's open tomorrow, we'll see some sideways and then some small upside grinding, and then further weakness, more sell-offs on the US market. Now, why is there a sell-off, or why is there like further weakness in gold? Well, one of the reasons you have to see is the dollar got a little bit stronger. It wasn't just that gold, became weaker, but the dollar actually got a little bit more strength. And I'm sitting here, I'm thinking, okay, if the dollar got more strength, people must want to buy US assets, right? So the stock market must be doing well. Well, I go to the stock market today and I was like, oh crap, it's also in the red. Actually, everything's in the red. This, I think, is the first sign of cracks in the stock market. Now, what is the relationship between the stock market and the dollar? Well, if the stock market, let's say, is in a bullish trend, what you will see normally is a relatively strong and slightly bullish dollar along with a bullish stock market. That is a healthy bullish stock market. That means that investors want to buy American assets, so they're constantly buying dollars, pushing the price of dollars up, and then they buy assets, right? They buy American assets, they buy US assets priced in dollars. What happens if US assets are being sold off, right? And people are just holding on to dollars? Well, that's sort of a bearish sign. It's not a good sign if you are at a peak of a market. If you're at the peak of the market and the dollar is super strong and is going to grow stronger, I don't think you have to worry too much. But if you are if you've been on a downward trend for a while for the dollar, the market's been going up, and all of a sudden the market's going down and the dollar grows a little bit, I think you should worry about the market at that point, because potentially what's happening is you've got some sell-off and people are worried and they fly to the dollar as a short-term safe haven. You're like, yeah, but the dollar is a fiat currency. I know most stackers and gold bugs, we treat the dollar as it's worthless. But the dollar in the short term is a safe haven currency. It is one of the premier safe havens in the world during times of crisis, especially short-term crisis. I'm not talking long-term, whether the dollar will be completely destroyed in 50 years or not. I'm talking about like within the next like 1 or 2 years. What are people going to hold if the stock market crashes? Well, they're going to hold dollars, right? Now, they might move from dollars to other assets such as gold when they expect stimulus. We're not at the point where we have stimulus. We're not at the point where gold is growing because of stimulus. We had some growth, right, in the beginning of the year. After the March crash, people expected a strong stimulus. There was strong stimulus. The dollar devalued. And then, boom, you saw what that did to gold prices. It went to $2,000. And that was I would say, a small stimulus compared to what could potentially happen. Now, if you look at the current economic situation, the amount of stimulus that is required to bring back the economy. Let's just talk about one part of it, stimulus checks. How much does it cost the United States to issue stimulus checks, for example, for the next 3 months? They said, I think the Congress said that, the stimulus checks were not in consideration, the $1,200. Well, those stimulus checks apparently over the course of, I think, roughly 3-4 months, don't quote me on this, but it would be 300 billion, right? That's 300 billion of direct stimulus that would need to be funded by QE, and then the fiscal side takes that money and gives it to people. Okay, that's 300 billion. What if you had to run that over the course of 2 years to get you out of the recession, right? 2 years. Think about that. 2 years for the economy to recover so that people can be in a safe enough position, start paying back their rent and so on, mortgages, so on, and they won't need stimulus checks. Well, if it takes 2 years to run that, and each 3 to 4 months is 300 billion, you times that by 4, you got 1.2 trillion, you got 2.4 trillion. So just for stimulus checks, you're looking at almost 2.4 trillion over the next 2 years. What if they don't issue stimulus check? What if they issue other things, Well, I have to say that if they start just giving PPE loans to banks, adding liquidity into banks, that's just going to drive asset inflation up. And that's just going to make the situation possibly worse, because it will most likely drive stock prices up, completely kill bond rates, absolutely weaken the dollar. We'll see a sideways grind for gold. And then at a certain moment, people will start selling their stocks, and because whatever's underlying the stock market is completely worthless because there's no economy to buy the products made by these companies. You could see a massive crash, and then destruction of the dollar. In that case, yeah, you might see the destruction of the dollar. That might happen in the next 5 years if they decide to not do direct fiscal stimulus, but to just bail out banks and so on. That would be not a good scenario. But it would drive the price of gold in dollar terms up, not because gold is worth anything more than it was like 100 years ago, but because the dollar has been completely, utterly trashed with bad policies. So what is the sign today? What does it tell us that the dollar is getting stronger after being on such a strong bear trend, and the stock market is actually going down and everything's going down? Well, people are flying away from the stock market. People are flying away from the stock market, and they are holding onto cash, expecting a crash of everything. And most likely during that crash of everything, it'll be a time for you to actually pick up gold. And pick up gold, pick up some, add to your stack, buy some physical. Now, you have to be aware. During a crash, premiums on physical gold and silver might go up because your dealer, he didn't buy gold, his gold supply. He might have sold all his silver until recently. He might have been low on silver, and he had to buy silver to sell more silver, right? And he might not be able to sell silver at the new spot price. What typically happens during such a fast crash is that premiums stay high. I've noticed that with my normal dealers, that a lot of them have removed sales they had on gold just to reduce the premium. I've noticed that some of the sovereigns I used to buy, they're no longer on sale, so the premiums have already gone up. They're expecting the price to diverge. There are still some sovereigns that are on sale, not all of them are on sale. And what I think might happen is that, gold, the price of gold is going to go a little bit lower. Even if it goes lower, we are still on track for $2,000 gold from this point onwards in 2021. And I think, we're going to see more weakness in the stock market, potentially in the short term, possibly a strengthening of the dollar. And basically higher premiums. But higher premiums means that, you can buy, try and negotiate, try and get some cheaper gold and silver. Now, what I've noticed also, if you really want to take 100% advantage of the drop, if there is a crash of everything and you want to ride the wave upwards, you have to buy paper, gold, and silver. There's no way around it. I've set up, like, I haven't touched my trading accounts in a long time, but I've decided to, reactivate it and look around. And basically, I start tracking paper, gold, and silver. In the case where we do have a major reversion, that will be a good buying opportunity. There really isn't a strong case for a bear market for gold and silver, especially if there's a reversion for silver and platinum, especially platinum. If I see an extremely strong drop in platinum, we saw a -2% drop in platinum, which for me, if it keeps dropping, I will buy more physical platinum. But if it does drop like very fast, very quickly because of a crash of everything, it means that my access to platinum, I won't buy physical, because physical I have to pay tax on it, and also it's not delivered instantaneously. I would buy more paper platinum. Now, when you're buying paper platinum, you have to make sure that your platinum is 100% backed, and don't buy anything leveraged. Buy 100% backed platinum. The one I use is from a Swiss bank. The ETF that stores platinum is from a very reputable Swiss bank, and that is a bullion dealer too. So I'm pretty confident about the supply and the availability. What you have to realize is with these banks, they do tend. So if it's not it's awesome if you're with them as a client buying paper, because they back their paper. Actually, they back their paper first. But if you try to buy bonded and store platinum with them, sometimes when they're short at backing their paper platinum, they will borrow from their clients who have bonded gold with them. So that's one thing. Like, I would not store my physical gold with these guys, but I do believe that they will always back. They have enough stock in their stock to back the physical platinum and paper trades. Now, I would say only do that for the short term. Don't do it for the long term, because in the long term you want to hold the physical asset, and because you don't know if the bank will still be there in 100 years, 200 years, 300 years, or whether they'll be solvent or not. But in the short term, at least as a financial product, and to be able to ride the price wave of gold, silver, and platinum during a crash of everything, you do need paper. And yeah, I know most gold bugs don't like paper. Most silver bugs don't like paper. Any stacker does not like paper. But sometimes, if you want to make a little bit extra, you do have to go and have, keep an open mind and decide that maybe paper is not so bad. I am buying a little bit more physical, because actually paper, there are some fees associated. You're like, huh, fees associated with paper? There are some fees associated with paper. But, and actually for me personally, where I live, physical is cheaper, especially if physical is matched to, especially if my gold sovereigns are close to spot and they're bullion grade, they are cheaper in terms of premiums compared to paper gold. You're like laughing, what? Physical is cheaper than paper? Yes, some physical can be cheaper than paper gold, but not all the time. But you do have cases where physical is cheaper, and depending on which one it is, if a physical is cheaper, then go buy physical. You just have to be aware that physical, you can't go below certain units I think the paper gold ETFs are traded in 5-gram units, so it's not super expensive. And the physical gold, well, gold sovereigns are 7.3 grams, so actually you have to pay more, but the premium is less. So I'm not going to do a long episode today. I've received feedback that, I talk a lot. To conclude, don't worry too much. We're still on track for $2,000 goal end of year. I think anytime we dip below this line and we're trading around this line heading towards the 2,000 level, it's, you can buy in a little bit. It's buying opportunities. Cheaper gold, I think, we shouldn't see when there's a dip that gold is going down as the end of the world. When there's a dip, it just means that gold is on sale. That's what you need to see. We're always happy when prices drop for our tomatoes, for groceries, and we think that it's on sale. Or if a housing price drops, oh wow, it's on sale, and then people buy into it like crazy. But when we see financial assets drop, people think it's the end of the world. They don't see it as something on sale. So keep that in mind. That's a philosophy to have if you want to buy, financial assets or gold or silver, commodities on the cheap. As it drops, buy more because it can't default and it's money. So to conclude, don't worry too much. It's not anything too abnormal. Actually, if you look at technical data and everything, it's expected that it will correct somewhat today because of the strong rise. We're still above resistance levels. There's some quite strong resistance level at 1840. Possibly we might test it again, but it seems more like we're going to test the highs and keep stacking good health. Like the video, helps me out a lot. Leave a comment. It's always interesting to talk to you guys. And thank you very much for watching. Dave out.